if you just want to get started trading, but you're not sure where exactly to start, and you're just new, right? I've got two strategies for you, right? So they are just so like the first one is for price action, and the other one we're going to be using an indicator, right? So if you think that you can handle price action, then you can just stick to the first one. But if the idea of even drawing a trend line or a support and resistance level horizontal lines is just completely new to you and even harder, then it's better if you just leave it, right? So and stick to the second strategy that I'm going to be sharing with you, right? So for the first strategy that you can use, it's actually zone flips, right? So if you are new, I don't think you know what zone flips are, so I'm just going to explain it a little bit, right? So with the market, let's say the market is going down, right, in a downtrend, right? So right over here, right? So we say the market is going what? It's going down, right? And as we know, the market is what? Yes, pullbacks, right? It's not going to go down straight, just straight flat like this, right? It's going to have pullbacks in between what? In between those trades that we can have, right? So over here, what do you want to look for, right? So when the market is what? When the market is trending, what do I want to select this screen? What are you doing? Right, so what we're going to be looking for over here, right, is we are just going to be looking for one thing only, right? So that's our zone flips, right? So our zone flips is when a broken support is when a support is broken, it becomes a resistance, and when a resistance is broken, it acts as a support, right? So that's just the basic concept that we are going to be using, right? So what is a support? First of all, right, a support is, let's say we're going down, right, an area where the market starts pulling back, going up, right? This area over here, it means that there's something over here that the market is reacting to, right? That forced the market to go up a little bit, even if it was just for a while, right? Then it may continue going downwards. But right over here, it shows that there's something that forced the market to continue to go up a little bit, to retrace a little bit, right? So that's the support area, right? And over here again, this is a resistance area, because over here we're saying that there's something that forced the market to continue going downwards. So this is a support and this is a resistance, right? So a support, it means that it's lifting the market, and a resistance, it's pushing down the market, right? So those are two different things, right? So that's what support and resistance means, right? So when this support over here, it gets broken, right, and the market comes back to test that area over there, right, that's what we call a zone flip, because a broken support now usually acts as a what? Resistance, right? Usually, not always, usually. So that's the setup that we're going to be using. That's the setup that we're going to be maximizing. And if you just stick to that alone, I'm sure you'll be quite profitable for your level, right? So over here, right, so you won't get as many entries, but if you just want a starting point, is this is actually the best and the simplest strategy that you can use, right? So over here we're going to, let's say we're going down like this, right? So when we break this structure over here, we just mark this area, and when the market pulls back to that area, right, that's when you start looking for your entries. I'm not going to go much into depth about what we're going to be looking for in a pullback, but we're just waiting for the market to pull back over here, and you take what your entries when the market starts to fall, right, when there's a candlestick confirmation or something like that, right? So over here again, you mark those areas, and you mark that area again, and you mark that area, and as you can see, it's not going to be respected always, right? Sometimes, as you can see, like in this example over here, it breaks past that zone a little bit, and then it continues going downwards. That's why you want to see our candlestick confirmation, right? So I'm just going to go into the charts and show you what you are looking for, right? So over here, right, we take our horizontal line, right? So as you can see, we're going down over here. Market break structure to the downside continuously, right? So we're going down, right? So we come over here, right? This area over here, the market over here, the market went up a little bit, which means that this is a support area, right? And when the market breaks that area and here's a pullback to that area, right? We want to see this engulfing candle, this red engulfing. After we see this red engulfing candle, we can enter for our sell opportunities, right? And after that, the market breaks structure to the downside again, right? So we mark this zone over here, and the market doesn't pull back to it, right? There's no problem with that, right? The market doesn't pull back all the time, right? So we don't have to force trades, right? So wait, mark this next area of interest. The market doesn't pull back to it, it's still okay. There are many chances that we're going to miss, right? The market can continue going down without you, but you don't have to act irrationally. Just wait for your setup, right? Over here, we've got a support area over here, and when it gets broken, market pulls back to it, and we take that entry, right? You mark this next resistance over here, right? And the market pulls back and it breaks it, right? Over here, we've got this support area over here. When the market pulled back a little bit, we came back and tested it once, twice, and the third time it continued respecting, right? So it's just this simple concept that you can use, those simplest concepts that you can use in order to trade, right? So let's say in this example over here, we got a zone flip area over here because this was broken, right? And the market put back and it is respected. But let's say that this area wasn't respected over here. So obviously we're going to mark this area over here because this is also what a zone flip area, right? So the market didn't pull back over there, it just respected the first level. But if it had broken past that level, we are going to be looking for this level and maybe this level over here, right? So that's just what you have to look for if you are looking for zone flips, right? Let me check if there's an uptrend where I can see what these examples, right? So over here, let's check our horizontal line, maybe over here, right? So we've got this resistance over here, gets broken, the market pulls back to it, it tested and it respected, right? And then you mark the next zone over here, breaks a little bit, retest, and it continues, right? And then you mark this area over here, right? So initially at this area over here, but then you mark this area over here because this was the highest point that the market had reached. So that's the first area that we'll be looking at. There's a breakout and a retest, and we continue going up over here. The market doesn't quite pull back to that area, and it continues going up, doesn't pull back and doesn't pull back, right? So it pulls back a little bit but doesn't reach over here, and then over here when it came, it just broke out. It didn't respect. So that's what you have to look when you're looking for your zone flips, right? So if you are just want to get started, this is actually a very simple strategy that you can use, right? So if you want to learn more about it and a little bit of price action, then I suggest you watch my price action video. I think it's titled the ultimate price action video for beginners, right? So you can watch that if you want to get started with price action, right? So then you can, the other strategy that you can use, I'm going to be using moving averages, right? So moving averages are a little bit simpler. You don't have to do anything with moving averages. You don't have to draw anything. You just have to install them, right? So I'm going to be installing the moving average period 50 method exponential, apply to close, right? So you can use this on your charts, right? You can use this on your phone, sorry, not on your charts. Of course, you're using it on our charts, but you can use this strategy on your phone also, right? You just have to set them up exactly as I'm setting them up, right? So I'm going to add two moving averages. Then you can start trading, right? So over here, I'm also going to add the 200 moving average, right? And exponential again, apply to close. And then I may be choosing a little bit of a purple, right? It's called dark orchid, but to me it's purple there. Even if you give it 50 shades, right, it's still going to remain purple for me, right? So over here, what do you have to look for, right? So with the trend, you can use for the trend you can use these moving averages, right? So if the purple moving average is on top of the candlesticks, it means that you are going down. And if the purple moving average, again the 200 moving average, if it is below the candlesticks, it means that we are going what? We are going up, right? That's what you have to look for. And then for our entries, and also for your trend, you can just use the crossover. You can just look at the crossover over there, right? But yeah, you can just stick to the purple with the 200 moving average, and then you can set it into any color. It's not strict that you have to use it as purple, by the way, right? So over here, we're going to be entering when the market pulls back to the 50 moving average. That's when we're going to be looking for our entries. But in this example over here, when you're using this strategy, I don't want you to use the 50-minute time frame because you'll get very, very few entries. This entry over here and this entry over there, right? But I want you to use, you can get entries, but you get them very, very low at a lower rate. So I want you to use the 5-minute time frame where we get more entries, right? So the 200, I'm not teaching you how to use the 200 moving average for your entries, but you can also use it for your entries, by the way, right? And it's actually profitable also, right? So what do you have to look for over here, right? So over here, right? So let's check where the market crossed over, right? So over here, crossed over for our buy positions, for our buy for our uptrend, right? So we are looking for our buying positions, right? So our bullish positions, right? So over here, we're going to be entering, let's say over here, right? When the market put back to the 50 moving average, 50 moving average, 50 moving average, right over here, this is a breakout. You don't have to enter over here, right? But though there are some concepts that I might share with you that if you are combining it with the RSI or whatever, you can able to take this trades. But since I want to make this simple, I'm not going to go much into depth, right? So you're just the 200 moving average. You're also not going to be using it for entries in this video, so there's no entry over there, right? So let me just drop back and see where there are more examples so that you can be able to trade using this strategy, right? So this strategy you can even use it on boom and crash, right? So let me just, this over here, you're entering 1 2 3, this was almost an entry, right? You've got 3 trades over there, right? So as you can see, it's a very powerful strategy on its own. Right, you can also use it for your boom and crash. Right, so let's see over here. Right, so right over here, as you can see over here, what after 5200 cross, purple is on top of the candlestick, our 50 moving average is on top of the candlesticks. Right, you enter when the market puts back to the 50 moving average. You've got entry. Right, this was a little bit of a breakout, but it's slowing down in momentum. But I don't enter over here. Right, then I've got an entry, breakout, entry. So as you can see, most of the times you will be profitable, right? So most of the trades that you enter, you are going to be profitable, right? So if you just want to get started, then I think that's about it. And if you want to learn more, then be sure to check out some of the videos that I talk about the RSI, and then you'll be able to get those perfect trades. You can check this video next.